everyone, and thanks for joining this conference call. We are here to discuss Bandhan Bank's business and financial performance for the fourth quarter and financial year ending March 2019. Along with that, we'll also take the opportunity to update on the recent merger announcement of the Qtr4 Finance Limited with Bandhan Bank. To discuss this in detail, I've got with me our founder, Managing Director and CEO, Mr. Chandrasekhar Ghosh, our Chief Financial Officer, Mr. Sunil Samdani, and myself, Hiren Shah, Head of Investor Relations. Now, I'd like to request our founder, MD and CEO, Mr. Chandrasekhar Ghosh, to brief you all about the recent developments in the company. Over to you, sir.
Thank you, Hiren. Welcome to all of you after complete of the 1 year listing of the bank and 3.5 years journey in a bank. We are now completed 3.5 years. So we welcome to all of you to listen our performance in 2018-19. Bank performed 18-19 is a good. So financial year, though it is a little bit challenging year 2018-19, but in the Bandhan Bank performance, the positive note with visibility of growth and improvement in asset quality and liabilities profile. Asset growth, if we see that in the quarter-on-quarter basis, growth has come the 25.78%. Or if it is say that the year-on-year basis, it is coming 38.46%. The amount-wise, the advance in our bank as on March 2019, 44,676, which was the last year 32,339 crores. So year-on-year growth has come 38.46%. And of course, in this, the loan book, we know that we have the large amount of loan book is a microcredit. So microcredit loan book is in 86% and other than microcredit is in 14%, which was in the last year in the same way we are doing all that. Coming to the deposit part, the deposit as on March 2019, 43,232 crores. If we compare with the quarter-on-quarter, last quarter we closed it 34,639 crores, which is quarter-on-quarter basis is our 24.81%. And year-on-year basis, it is coming on that the 27.64%. So these are the deposit, but the deposit part I highlighted in here. Our retail deposit is a 77%, and CASA has come 40.75%. So it is the deposit is very much the good way as a growing, and also diversified the retail deposit growth. In this year, we see that the retail deposit growth in the Central India zone is a 45% growth, West India 41% growth, East India 39% growth, North is in 31%, South is a 30%, and Northeast 22%. I like to highlight it in here. So our focus always in the retail. So retail deposit is now diversified across the country, not only concentrated in East and Northeast India on that. The next point I am talking about the net interest income. So that this is the quarter. If I say that the fourth quarter, 1,258 crores, and which was in a 864 crores in the last year on that quarter, and it has been come the quarter-on-quarter growth 11.92%. But if I say about the year-on-year basis in net interest income, 4,496 crore as on March 2019, which was in early last year 3,032 crores. That means year-on-year basis 48.28% growth has come in the net interest income. non-interest income, which is the quarter-on-quarter basis, in the fourth quarter of this year has come 388 crore, and the last quarter has come 234 crores. That means we are seeing that the quarter-on-quarter growth has come 65.81%. And if we see that the year, non-interest income has come in March 19 is 1,063 crores, and which was the last year 706 crore, which is growth has come 50.57 crores. And coming to this, the profit, overall in that, this quarter profit has come 651 crores, which was in the last quarter was 331 crores. That means the quarter-on-quarter basis, if we see that, that is in 96.68% growth of the profit after tax has come. But if I go to this year-on-year basis, so as on March 2019, our profit has come 1,952 crores after the tax, which was the last year 1,346 crore, which is 45.02% profit growth has come in the bank. So these are the total matters. I say that how bank are doing good. So I like to mention some points is now we are the NIM is coming on that in the March 2019 10.43%, and we are seeing that as the cost to income ratio, which was the last year 35%, it has come down 32.58%, and the ROA, which was in the last time 4.06, it has come 4.23, and ROE, which was in the last year 25.98, it has come down 19%. We know that the last March we have been listed and we have been infusing some new equity. And the retail deposit in our bank has come 77.36% is today out of total deposit, which was earlier year 71.93%. That means the retail deposit amount was also increased is more. And capital adequacy ratio, bank is now 29.20%, which was the last year 31.48%. Cost of fund, if we see that the cost of fund without our capital, and we see that 6.30% as on March 2019, which was in the last year 6.65%. That means 0.35% our cost of fund has come down. But if we consider if we not consider as a capital which we raised by the March, so that is my cost of fund will come in March 2019 4.84, which last year it was in a 5.52. So in that context also we see that cost of fund has come down. But OPEX ratio is a remain. Last year it was in a 3.6%. This year also has come 3.6%. So coming to this, the portfolio quality. So portfolio quality, it is a two factors in here. One factor including ILFS and excluding ILFS. So we say that the overall together with ILFS, our gross NPA 2.04%, which was in the last quarter, it was in a 2.41%. But if we not count in the ILFS, we see that the real, the portfolio quality on that, the gross NPA 1.08%, which was the last quarter, it was a 1.30%. I like to notice in here, there is a 0.22% of gross NPA has been reduced in this quarter. And coming to the net NPA, which was the last quarter is of 0.70%, it has come down 0.58%. That means we arrested the default rate, and we are always focused on that, how our customer will be like to become a disciplined way, return back the money to the bank. So they are return back the money on the same day, that percentage is a 99.30%, which was in a 1 year before 98.70%. So when the 99.30% of people regularly repay their installment, that means our NPA reduced, default rate reduced, portfolio at risk reduced. So it is a very fantastic result across the world. I can say that. So this is helped us to return increase, and also growth have been also helped us to grow more. Coming to the branch, we have the 986 branches as of March 2019, which was 1 year before 936. That means 50 new branches we opened. We opened 250 new DSC, Doorstep Service Center, which was in the last year 2764. Now it is in 3014. So our total banking outlet 4,000, which was in the last year 3,700. It was in there. ATM, we opened the 20 ATMs. As of now, we have the 480 ATMs. Whatever we have at the branch, and all branch together, we see that 75% of our branch are in unbanked district. And so that we are focusing the retail customer to get the good liabilities and providing them to credit, and it is very good opportunities coming to the bank. Coming to the customer point of view, we have now 1.66 crore customer, which was the last year 1.30 crore customer. That means that 36 lakhs new customer added in this year, and growth has come 28%. Very interestingly, I saw that our 986 branches, they are added 10.52 new customers, 10.52 lakhs new customers, and their now customers is 34 lakhs 59,000, and their growth of the customer increase has come 44%, which is total bank growth, which is higher than total bank growth of the customer. And microfinance, we have the 1.31 lakh customer, which was earlier 1.06 lakh crores customers. So which means that 25 lakhs new customer added, which is 24% on that. So we see that the point of liabilities part and the banking outlet, which helped us on that to attract the more people, add in the bank and add in the deposit on that. So on the basis of that, of course, we are increasing number of borrowers in the bank, so that our advance growth also increased that much. So I see that after last of the 2 years, we see that after the demonetization and GST, so some issue has come and NPA increased. Now it is totally, I got the confidence with my team. They are build up their capacity in such a way to handle in any types of the challenges in the field level. So I see that this is very good, and future growth on the basis of that is coming very good on that. Whatever I see, the business model of Bandhan Bank is a very unique. We are trying to continue on that. Liabilities after 3.5 years, a lot of discussion is there. We are confident now that the liabilities is coming and a very good trend, and we are not feeling any uncomfort. The liabilities will be challenged on that. And third point, the cost to income ratio is coming lowest in the industry. NPA also coming to the lowest in the industry. Cost to average cost of the bank has also remain in the same. It will be not increase on that. So which have been helped to our team to work in a growth manner and to provide the financial services in the country, not only the eastern region. So thank you to all of you. But finally, I also share on that. You know that we are in the way to go to the merger of the Qtr4 Finance, so that we are received the RBI approval we received the SEBI approval. We also received the CCI approval. And now we already applied to NCLT. So that NCLT, our process already been started. We've seen that a very good, smooth way it has been progressing. And whenever they are given the final their approval, and we are also simultaneously making our plan. So after that, the approval, how quick we can be like to march and work together on that. So thank you to all of you. I hope you have some question. I myself and my team will be like to share our thoughts. Thank you.
Sure. Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Sri Karthik from Investec. Please go ahead. Sri Karthik from Investec, you may go ahead with the question.
Hello. Is it better? Yes. Good evening, sir. Thank you for the opportunity.
Thank you.
Sir, I wanted to get a little bit more color from you in terms of the customer profile on the microfinance business. So how much of it would be exclusive customer base and how much of it would have overlap with other lenders?
That's a good point on that. We saw that our customers who are only with the Bandhan, that was in the last year, we saw that in the 72%. Now it has come 60%. And we trying to find out on that the cause. The cause is there. If you see that our loan is a one single loan, until this loan will not close, they cannot be get the loan next one. So when the loan size has increased, so they have a need in the very last moment, the last 3-4 months, they have need in a small amount of the loan, and they are getting from the other MFI. So these have been coming now. It is little bit lower number is only from Bandhan.
And sir, in terms of a customer growth, 21-22% active borrower growth, could you give us some color in terms of the state-wise, whether it's uniform across East and non-East, or is it primarily, again, still coming from Eastern states?
Yes, I will give to you on that. That is earlier we saw that because of our the main base of this type of customer in a East means in that the basically 4 states, West Bengal, Bihar, Tripura, and Assam. Now it has been expanded in the other states. So that our customer growth has come. That means in the borrower, East and Northeast together is a 16% in this year. And other than East and Northeast has come 37%. So that is other than East and Northeast, it is coming up. Especially in UP, MP, their growth has come 45%. So even someone is coming there 48%. So I feel that this is now diversifying the number of borrowers in the different other states.
And the 60% exclusive borrower mix would also hold outside East?
Yeah.
Okay, great, sir. My second question is if you could share a little bit of a breakup of our fee income line items.
Okay. I'll be suggest on that Sunil can be mentioned on that point.
Yeah, so on the non-interest income side, our largest component is processing fee followed by PSLC income. So on a full year basis, if you talk about Q4, out of 388 crores of total fee income, 197 crores have come from processing fee, 105 crores from PSLC income, and there are others.
And on a full year basis, sir?
About 523 crores on processing fee and 309 crores on PSLC income.
Great. Thank you so much. That's it from my side.
Thank you.
Thank you.
Thank you. The next question is from the line of Adarsh B from Nomura. Please go ahead.
Hi, thank you for taking my question. Question on the MFI disbursement. Can you just give the number of what was the average disbursement ticket size in the fourth quarter versus the third quarter, or maybe if you can give the trend?
No, if you see that the average disbursement has come on that the 59,007 rupees per customer, which was in the last year it was in a 51,771 rupees. That means in the 14% increase on the disbursement side on that. But we are also like to mention in here, we have the 4+ loan cycle customer, the more than 55% in our bank. So that they are and also 60% of our customer, which is a single loan from us. So that it is a little bit talking on that, the 14% to 15% increase year on year.
So quarter on quarter, our disbursement has remained flat from around 58,000 or to 59,000.
Understood, sir. Understood. And the second question is, just wanted to understand from a branch opening and DSC perspective, after the restriction came in, how many episodes of permissions have you all sought and how many have you got for branch opening?
So we got permission twice. We applied twice, we got twice. In the first stage, we applied for 40, we got 40. In the second stage, we applied for 25, and we got 25. So out of the 65 branches, we've opened 50 branches during the year, but 48 out of these 65 we've opened, and the rest will open during the next 1 or 2 months.
And does any of these permissions are required for DSCs as well, since you've added DSCs, or that's still open to your discretion?
We do apply for DSCs as well.
Okay, so whenever what I want to understand is you're still not complying with the shareholding structure that they want, and you obviously gone one big step with GRU. So whenever you've applied, you've got the permission. So you all don't sense any restriction whatsoever in terms of DSC or branch opening from the RBI till you comply fully with that norm?
So, given our last 2 applications, we are quite confident that we will continue to get. But the only difference here is, it's a process which takes time. So earlier, with board approval, we could open the branch. Now we have to apply to RBI. So that process takes a couple of months.
Understood. And last question is the 72% exclusive customer going to 60%. How much of that, if you've checked in the bureau, what is the kind of ticket size of that incremental loan your customer is taking from somebody else? Because, initially our disbursement size was supposed to be 60 because it was supposed to be mutually exclusive. Now the percentage of mutually exclusive customer seems to be going down a little bit. So maybe at the customer end, the leverage may be, increasing. So if you could give some sense on that.
So, yes, sir. So, Adarsh here, as Mr. Ghosh explained in the earlier questions, that, we have a policy of 1 loan per customer. So, till that loan gets complete, we don't extend further loan to that customer. So, let's assume a customer has a 70,000 rupee loan and he's already paid 40,000-50,000 rupees out of that 70, right? But we will still not give him fresh loan as we had not started top-up loans. So the customer, without increasing the leverage, because his business requires 1 lakh or 70,000 rupees, he will go to other MFI and other places and take loan. So that is one pattern what we learned, that why is customer going to other MFIs.
And is it also true that post demonetization your states held up so well that you've seen inflow of many large, if you look at your states and the MFIN data, it suggests that a lot of new MFIs have come into your state, so the competitive intensity is also increased.
No, if you see that is, of course, you cannot be stopped to other will come or not. But how the customer service will provide, that is the point on that. But we saw in the market, in our data, Last year, our retention rate, that means in the dropout rate of the customer, was a 12+%. And this year, I saw that it has come 9%. So 3% of my customer retention rate has come good. So that is also meaning on that whoever is coming, it is not the impacting to our business point of view on that.
Understood. And my last question is on cost ratios. You had a pretty sharp moderation in cost ratios over the last couple of years. Where does this go? Because now it's an, branch opening is dependent upon RBI approval, but then there is a potential beyond which you need to open more. So I'm just trying to understand, have we come to the optimum point in cost income or cost assets, or how should one look at it?
If you look at our OPEX ratio, year on year, it has remained flat at 3.6%.
Yeah.
So we believe that's where it should be on a steady state basis. Now, cost to income is a factor of income as well. So since we improved our NIMs this year vis-a-vis last year, the cost to income has reduced.
Understood. No, this is good. Thanks, Will.
Thanks.
Thank you. The next question is from the line of Parmesh S. from GM Financial. Please go ahead.
Hello. Hi, this is Samir here.
Hi, Samir.
Hi, how are you? Congratulations on a good set of numbers. Just had a quick question on what is the thought process on provisioning. I mean, we've had very strong quarters, strong profitability. Is there any thought on whether we should make some contingent or floating provisions just to keep as buffer in probably tougher times?
So, Samir, as a bank, we provide additional standard asset provisioning because for microfinance business, the required as per RBI standard asset provisioning is 0.25%. Against that, we provide 1%. So, in a way, on almost 38,000 crore of book, we have 0.75% excess. So, we don't have a contingency provision because, contingency provisions, sometimes regulator tends to view it as a profit management exercise. So, this goes as a standard, ratio. As soon as our micro book increase, we provide 1%. So the point is we have higher excess standard asset provisioning than the required as per regulations, right? So which is about 300 crores. So if, as again standard asset, if we provide contingency provision, our net NPA would have been zero.
Right. That's helpful. And secondly, what is the thought process on the holding company stake, and is there any further discussions with the regulator, which probably you've had?
No, if you see that after the merger, it will come 61%. And the balance we also mentioned earlier also is there. So that amount will be like to process on that. We are very strategically working on this. And hopefully we'll be very shortly like to make a compliance issue with that keep in mind. And accordingly we'll be like to process.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Aseem Pant from HSBC. Please go ahead.
Yeah. Hi, sir. Thank you for this opportunity. My question is relating to your small enterprise loans. Just wanted some color in terms of what's your average ticket size. The book has kind of gone down a bit year over year. So, what's the reason behind that, and what kind of customer overlap it has in terms of, how many customers in this segment are your ex-MFI customers?
So, small enterprise loan we had developed to target a segment which is slightly above microfinance. So here we cater to a loan ticket size of between 1 lakh to 10 lakh rupees. The average ticket size here is about 1,84,000. And typically, of the total book, about 30% of the customers will be the customers migrated from MFI to SEL, small enterprise.
Okay. And, sir, and the reason behind the decline year over year? I mean,
So this was the segment, which impacted the most during DeMon and the GST particularly, right? So, and we also as a lender changed our policies because this was a product which was purely based on assessed income program. And when we saw the environment changing to GST, we thought it was the best surrogate to assess the customer. So we also remold ourselves to assess the customer basis GST return. So this entire exercise took us about 6 months. And that's how the business slowed down during that period.
Sure, sir. And sir, what would be the average ticket size of your SME book?
On the SME book, the average ticket size is about 64.5 lakhs.
Great. Thank you, sir. Wish you all the best.
Thank you.
Thank you. Before we take the next question, a reminder to our participants. Please press star and 1 to join the question queue. The next question is from the line of Akash Datani from HDFC Securities. Please go ahead.
Hi, my questions have been answered. Thank you.
Okay, thank you.
Thank you. We move to the next question. The next question is from the line of Hiten Jain from Invesco Asset Management. Please go ahead.
Yeah, in the past, you have explained the seasonality on loan growth side. So what explains the seasonality on liability sides on the deposits?
If you see on the liability side, it clearly follows the asset requirement. And this quarter, the additional, retail liabilities is like a linear graph. It is not that volatile. But since Q4, our asset business goes up faster. That's when you will see the bulk deposit also have grown in Q4. Right. So that's essentially the big difference between the deposits.
So maybe this 77% is your total retail deposits.
Yeah. Right. So if you see this ratio in Q3, it was 84%, the retail deposit to total deposit.
But if you see that in the last year, it was in a 72%.
But like-to-like basis, if you compare it to view the seasonality, the Q4 of last year versus Q4 of this year, as again 71% retail, we are now 77% retail.
And I also mentioned some of the analysts, I saw that report. They're saying that the Bandhan is in highest amount of the retail deposit, the bank in country.
Oh, all right. Okay, thanks.
Thank you.
Thank you. The next question is from the line of M.B. Mahesh from Kotak Securities. Please go ahead.
Good afternoon, sir. I had a few questions from my side. Just let me know if you could take all of it. First question is on the slippages side. If you could just, tell us what were the slippages for the quarter or year. And given the fact that you made about 150 crores of provisions, just wanted to understand why has the gross NPS remained more or less stable for the quarter. Second question on the yield on loans. Just wanted to understand directionally, do you offer differential interest rates in different regions on the MFI book?
Oh.
So that is another. Okay. And the third question is PSLC certificate. Why does it kind of see a very strong performance in 4Q? Because the validity is only for that particular year, right? Financial year.
Which one you're talking about? PSLC?
PSLC, yeah.
Yeah, so PSLC, since the Q4 is where we build, we book the maximum loans. So that's when we get the opportunity also to downsell maximum.
But this validity is only for 1 quarter, right? Because it closes at the end of the financial year.
Yes.
Okay. So this number, can I annualize this number for next year, saying that on the existing loan book which is disbursed today, since it's valid only for this quarter, and again you'll reinitiate it for the next year, and that will be applicable for the next 4 quarters, the number of PSLC income will be much stronger next year? How does it work there?
It's a factor of premium also, and premium is dependent on market, at what rate you are able to sell PSLC. So it's not a pure play volume, but also a rate factor there.
Any idea what was the rate at which it kind of goes in the market on PSLC that you are running on your book, on a MFI book? Is it 0.5%, 1%?
So, here again, there are 4 categories in PSLC, which is small, marginal, agri, micro, and others. So, rate for each of these categories vary, not only product-wise, but also which part of the year we are selling. So, in Q1, you get the maximum. In Q4, you get the least. Because someone who is buying in Q1 gets the benefit for 4 quarters, again, someone who buys in Q4. So, it's a factor of when do you sell, what PSLC you sell. So that combination derives. In our case, it was a little over 1% on a blended basis.
For the quarter, is it?
For the full year.
Full year, okay. And the first question on the slippages.
Yes, for the quarter.
Because we started off with 830 crores and we ended it with 820, and yet you made 150 crores of provisions. So just trying to understand how does the maths kind of work on this?
Yeah, so slippages during the year was 763 crores, which included ILFS of 385 crores.
For the quarter?
I have the numbers for the year. I don't have the numbers handy for the quarter.
Because if you had made this 150 crores of provisions, shouldn't your net, because I'm just trying to understand how much of the slippages for the quarter, because if it is not too much, given the fact that the efficiency of the business was running at, the collection efficiency was running at close to 100%,
yes.
Why has the net NPL not come down by a reasonably good amount?
So in fact, if you look at quarter on quarter, it has come down from 0.7 to 0.58. So a 12 basis point reduction quarter on quarter is visible here.
Yeah, but on a on a QOQ basis, because the collection efficiencies was very high, shouldn't this number be down very, very sharply? Because you already made a provision of 150 crores.
Oh, but you see, my provision coverage ratio has also improved. You know, last year, my provision coverage was only about 46-47%. This year, I am at 72%.
No, Sunil, I'm just looking at it on a QOQ basis.
Okay.
If you look at 230 crores, 235 crores of net NPLs, and it's now at 228. So there's no change.
So I'll give this number to you, but I don't have it ready right now for the quarter.
Okay, sure. Sorry, and one last.
But you keep in mind on that, the 1 quarter performance cannot be shown NPA is drastically coming down.
No. So the question is more on the fact that...
No, I am talking on that point. If you see that the one customer, he has been maybe the NPA in the 2nd quarter. But the 3rd quarter and 4th quarter, he is paying regular installment every week. That not means, my regular installment means OTR has come off 99.3, even maybe the 100. But this customer is not come out from NPA because 2nd quarter he was in NPA.
Sure. So if you go with that logic, then what should have happened is that the net NPL should have come down meaningfully because you still have made an additional provision and there was no fresh additions.
Okay. We'll check on that data and get back to you.
Okay, sure. And my last question is, what is the savings interest rate for the quarter?
This 151 crores that you see also includes standard asset provisions.
Yeah, perfect. And how much would that be?
And our book growth is maximum in Q4.
Okay, and would you have the...
Just a second.
If you look at the disbursements, I think you've made about 20,000 crores. At 70 basis points, that's about 140 crores.
No, but that's on the book growth and that's not on disbursement.
Okay.
So 50 crores is the standard asset provisioning roughly.
So then you have 100 crores which you have made for NPLs, which needs to be explained with the movement of the gross NPLs.
Yes.
Okay, thanks. And what will be the savings interest rate for the quarter?
5.12.
Okay, done. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Anand Dama from MK Global. Please go ahead.
Yeah, thanks a lot, sir. Sir, I wanted to understand on this promoter stake dilution that you already attempted to cut the promoter stake in the bank, is there a chance that you can apply to RBI for an extension of reduction in the promoter stake? Or is it that you don't see a chance and basically because of that either you would have to acquire them to some other company or you will have to run down this stake primarily through capital raise?
See, here we are evaluating all options. Right? RBI has not given us a specific deadline that we have to bring it down before a specific date. So as long as we keep progressing on this and keep updating RBI, our endeavor is to meet the requirement as early as possible in the best possible manner. So let's hope we'll be able to do that.
So can that be about, like, say for instance, you might opt for 2 years kind of a progressive reduction? Is that fine? I mean, will that be fine with RBI?
No, we don't want to put a timeline to that.
Okay, and fine. Secondly, about your microfinance customers, that you have now about 1.3 crores kind of a customers on the microfinance side. Is it possible to give a breakup in terms of, like, how many of these customers would have completed about 1 cycle, 2 cycles, or maybe 3 and 4 cycles? Breakup into the cycles of the customers?
We cannot be in the data in my hand as of now on that, but I can say that the 4th cycle plus, a borrower is in more than 55%.
Okay. And so ideally they would have started at what kind of a ticket size? Somewhere about 20,000 odd rupees?
25 and average is in 30,000.
Average. And now they would have reached the size of somewhere about 50 to 60,000 odd rupees?
It will depend on how long this customer with us and what types of business he is doing and how much is the credit need in there. So it isn't very much the granular level and the customer wise that decide my ground level staff and other level staff will check and then it will be like to decide.
In terms of loan outstanding, it is 67%, 4 cycle plus. Number of customers, it is 55%.
Okay. And sir, you've been early talking about the seasonality of the customers. So just wanted to understand this 4th quarter growth that we see, which is roughly about almost 26% quarter on quarter. So what is the seasonality that is there at the customer end, particularly the kind of customer that you cater to, that you have such a kind of growth, particularly in 4th quarter? I agree if it is corporate, but what is that actually for the microfinance customers to have this kind of a seasonality?
No, what's happened is there, microfinance, if you go to this, the trend of the microcredit customers, it is always in a 4th quarter is coming the customer growth and also the portfolio is there. The one point if you keep in mind on that, this is always all bank are given the funding in the last quarter. In that time, the bank priority sector beta target was in a last quarter. Not like this time is in quarter on quarter. So in that time they are, whatever they are need in a private sector lending, that much they have been disbursed to the MFI. MFI also taken that their customer more in a last quarter. And this customer is more or less is a 1 year loan on maximum the 2 years. Every time is in, now it is again come to this, the last quarter renew and taken on that. So that is the one side we see that it is happening on that.
Sir, any attempt on your side to actually bring down the seasonality so you can actually spread it over 4th quarters?
See, here our policy is to have 1 loan per customer, right? So till the customer repays the loan, we don't extend a fresh loan. And the average is 1 year or 2 years. So all those customers which are taken in the 4th quarter, as when we were NBFC, their loan gets closed only in the 4th quarter. And we are able to give fresh loans only in the 4th quarter. So that is one big reason why the seasonality is here. Yeah,
but now that you have become a bank, is there any way that you can actually bring down the seasonality?
You are correct on that, but we see that the 94 lakhs of my borrower was in a 74 lakhs was a legacy. So it's a very tough time to do it on that, but we are trying. But other point, if you see that, what we see in the eastern region on that, mainly this business also they are growing on the basis of link with the puja. So before the puja started the process on that, maybe he will close the loan in a 1st quarter But he is waiting when the puja will come 1 month or 1.5 months before, he will be taken the loan. And that time he is not taken the loan to grow the business. So a lot of things is there. So it is happening in that way.
If we change our policy from one loan and we start giving top-up loans, then yes, maybe this seasonality would come down, because we would not wait for the fourth quarter to give them fresh loan. So it depends on what is our policy.
Sure, but I think somewhere you have to work it out, sir. Yeah. The other thing was, what is the GNPA ratio in the microfinance book? One, and related to that is that you have two events right now. One is the elections going around, and again very intense kind of elections going around in the states that you deal with. And then the other is basically there is this cyclone which is around your region. So do you see that there could be some delinquencies coming up in the forthcoming quarter, primarily because of these two events? And you can also help us with the current GNPA ratio in the microfinance space.
Yes. So, in your first question, hello.
Microcredit.
Yeah, your GNPA ratio in microcredit.
This is 0.70%. It's more than 90 days.
And how much was this in third quarter?
0.81.
Okay, so it has come up.
It has come down.
Okay, and so these two events that I talked about, what is the impact that you see? Because
not really. In Bay of Bengal, cyclones are common.
Okay.
That's not a one-off event.
Sure. And so last question is about your the corporate book. So you had ILNFS, which was certainly a one-off event which happened for us. Do you have any other loan or an investment sitting into any of these new NBFCs which are in problem, or the corporates, the large corporates as such, which are currently into problem?
None.
Oh, that's great. Thanks a lot.
Thank you.
Yep.
Thank you. The next question is from Harsh Vijay Shah from Edelweiss. Please go ahead.
Yeah, thank you very much. A majority of my questions have been answered. Just one question on the non-interest income. You mentioned processing fees of around 179 crore and PSLC fees of around 105 crore for this quarter. Can I get the same number for last year, same quarter? That is Qtr4 FY19.
Sure. So last year, same quarter, against 197 crores of processing fee, we had done last year 153. And PSLC income was 4 crores.
4 crores, okay. And the second question is regarding the branch expansion. Given the RBI, assuming the RBI gives the approval, what is the branch expansion plans? That too focusing on east and northeast and other parts of India.
So our strategy, even before the restriction, was that once we cross 1,000 branches, we will try and consolidate and bring efficiency into those branches before we again start aggressively expansion. So we have the approval of 1,000 plus branches today. So the further branch expansion will not be as fast as it was in the last 2 years. Okay. Because we've built enough capacity already to, take care of our growth for next 2 to 3 years.
Do you have certain parameters? Means you mentioned that you will make sure that your current branches are performing at a peak capacity before you go for any further expansion. So do we have any parameters that you have set for the branches to achieve before you move on to expansion?
So typically, if you see the per branch customer today is close to 3,000 customers. Right? This, if you compare it with an established bank, it could be anywhere between 10 to 20,000 customers, depending upon what kind of branch it is. So we believe there is enough capacity available that we've built for us to keep adding customers into our existing network.
Okay, right. That's it from my side. All the best, and thank you.
Thank you.
Thank you. Next question is from the line of Nishant Shah from Macquarie. Please go ahead.
Yeah, hi. A couple of questions. So one, we've had like almost a doubling of your corporate TDs this quarter. 86% growth from 52 to 97 billion. And even the CASA ratios are down a little bit. Despite that, we've seen a decrease in the cost of funds in this quarter. So I'm trying to tie it in, how does this work? What has been the movement in the interest rates?
So, Nishant, here, if you see, while the bulk deposits have increased, half of it has come through a CD route, where the cost of funds have been competitive. And secondly, our CASA ratio improved in Q3. So the benefit of that full quarter came in Q4.
Okay. And could you quantify what kind of rates these were in the CD space?
CDs were, for a 6-month CD, it was around 7.5%.
Okay. Versus your general, long-term TD rates, bulk TD rates of close to?
Bulk TD is all liquidity and market dependent. In Q4, the bulk TD rates went up as high as 9%.
Okay. Fair. And one question on this NPL ratio. You just mentioned that the microfinance NPL is about 0.7%, correct?
Right.
So if I back calculate, that means the non-MFI portfolio has about an NPL ratio of 9%. Is that right? Because the overall book is 2%.
No, overall, yes. But if you remove ILFS, then the NPL is only 1.08%.
Okay. So that's what's skewing the number.
Yes.
Okay, fine. Yeah. I had some more questions on the disbursement side. I think there's some reporting problem, but I'll take it offline with Hiren. Thanks. This is it from me.
Thank you.
Thank you.
Thank you. Due to time constraints, we'll be able to take the last few questions. We take the next question from the line of Himanshu Tareja from Motilal Oswal Securities. Please go ahead.
Yeah. Hi, sir. Thanks for giving the opportunity. Sir, you, if I have heard correctly, you have said the average disbursement ticket size is 69,000. Can you just give breakup in terms of what is the average disbursement in the East region and from the other region?
This is in 59,000, but the East is in, what I say that, one point on that. 77% of our borrowers in East and Northeast who are holding that 80% of the outstanding.
Okay. And sir, then what if what is the disbursement in the last year? What is the average disbursement ticket size in FY18 versus if then this number is 59?
Last year it was in a 51,771.
Okay. And sir, just one, if you can just, in your initial comments, you have given the breakup of deposit growth from the southwest, east, and from the region. Can you just provide the same? Actually, just missed that.
That is in central India. We have the retail deposit growth has come 45%.
Over previous year.
Over previous year. And West India, it is in 41%. East India, 39%. North India, 31%. South, 30%. Northeast, 22%.
Okay, sure. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Sameer Vishe from JM Financial. Please go ahead.
I see that the IBPC portfolio has gone up for this quarter on a QOQ basis. Just wanted to know if you can share the interest income of that book.
So the IBPC which we did this quarter was at an average rate of 5.8%.
Okay. Thanks.
So essentially it means we raised money at 5.8%.
Yeah. Thank you.
Thank you.
Thank you.
The next question is from the line of Atul Mehra from Motilal Oswal Securities. Please go ahead.
Yeah, sir, from the MC team. So just one question in terms of if you were to look at it from a next 3 to 5 year perspective, now that we have two major asset streams, MFI and housing finance. So other than these two lines of business, what are the lines of businesses that you are seriously considering getting into and expanding from a 3 to 5 year perspective? And where do you see these in 5 years' time in terms of broad contribution as such? Thank you.
No, if you see that as a microfinance institution, when we become a bank, so first that time our main focus was in that the stabilize the liabilities growth.
Yeah.
With the balancing with our credit capacity how much we can be like to grow on that. And in that sense, if you see that our both the side we have been matched 3.5 years over, we are principally taken beginning of the bank. It will need the 3 years time to stabilize on that. And we feel that it is now come on that.
Yes.
And next on this year, it is an opportunity on that to come as a merger with a Gruho.
Yes.
So we are now focusing on that after this the merger, the Gruho portfolio grow and streamline, matching with the liabilities on that. This may be the more focus on that. Of course, simultaneously some SME, some micro and small enterprise will come, but we are not very much focused on that. We will focus on that to continue the microfinance growth, whatever we are doing on that. And the next, that is the new is coming, that is an affordable housing that will also grow. So this may be the next 2 to 3 years will be focused on that to grow in the business on that. A huge market, no doubt.
Got it. Great, sir. That's it from my side, and wish you all the best. Thanks.
Thank you.
Thank you very much. We'll take that as the last question. On behalf of Bandhan Bank Limited, that concludes this conference. Thank you for joining.